Good morning, everybody. Welcome to today's Meeting of the Minds webinar entitled Financing and Building Urban Entrepreneurship and Economic Opportunities in Cities. During each webinar, we like to take a reading on who's joined us, so you'll see a poll pop up right now asking which sector best defines you. My name is Jessie Feller-Hahn. I'm the Executive Director of Meeting of the Minds. Some of you are old friends and some of you are new friends, so I'll just introduce who we are very quickly. Meeting the Minds is a global thought leadership platform with year-round programming. Our mission is to connect urban sustainability, innovation, and technology leaders across sectors to share best practices, tools, and solutions through our blog, cityminded.org, our monthly webinar series, pop-up events, workshops, and our annual summit. This year, our annual summit, Meeting the Minds 2016, convenes in the San Francisco Bay Area, October 25 to 27th. So a few housekeeping notes to begin are, because of our large audience in attendance today, you will remain muted throughout the event. A PDF of today's slides as well as our brochure are already available in the handouts panel in your control panel on the right of your screen. We will also have those slides available on our event page later today or tomorrow. We will have a Q&A during the second half of the hour. When you have a question, please type them into the questions panel in your attendee control panel as you think of them. That's also on your right. We would appreciate your input regarding today's webinar. So a short survey will pop up when you close your browser at the end of the event. So it looks like 28% of you are from the private sector, 14% from the public sector, 8% philanthropy, 19% entrepreneurs, startups, and 31% nonprofit sector. That's interesting information for us. Great, thanks everyone for filling that out. Also helpful for Andrea and Napoleon today in their comments and presentation. So today we have two presenters who will be presenting the following order. Andrea Chen is the co-founder and executive director of Propeller, a social innovation incubator in New Orleans focused on systemic change in sectors such as food access, water, public health, and education. She'll be followed by Napoleon Wallace, who's a member of the executive staff at Self-Help, managing special projects across the organization, including small business lending, credit union turnarounds, mergers and portfolio acquisitions, and community development real estate projects. So with that, Andrea, take it away.
Awesome. Thank you, everyone, for taking the time out today to learn and learn about our work and hopefully ask a bunch of questions. I'm also very excited to be doing this webinar with Napoleon. And so today I'll be speaking about place-based social innovation. And I think it's a topic that will hopefully be of interest to many of you because in the past few years, there's just been a lot of momentum and conversation around incubators and accelerators as an economic development strategy. And we are using this concept as a vehicle to tackle issues of equity, jobs, entrepreneurship, the social and environmental issues we're addressing, and unique partnerships with government. So we know that New Orleans faces many challenges, but the challenges that we're facing we know are also not unique to us. And many coastal cities right now are dealing with climate change. And it's something that we're dealing with our sinking coastline to childhood obesity rates and poverty in general. And I think we have some strong proof points from our work in the past few years that social entrepreneurship can be and has been a driver of change and impact. So I like to start with a little bit of history and who we are. So this is a photo of our building. We started at around 2006, right after Hurricane Katrina, and we were a group of residents from all over the city that got together, and we were inspired by the grassroots action, the civic activism that was taking place right after the storm, where people were painting street signs because we didn't have street signs. People were just going out and mowing the neutral ground because city services hadn't been up and going yet. And many of these people were regular citizens, teachers, real estate agents, parents, and we wanted to make sure that this energy didn't fizzle out after the first 2, 3, 4 years, after all the volunteers went away, after all the federal funding and philanthropic interest went away. And so we started this organization because we wanted to sustain this momentum. And we've actually found in the years that we've been going that we've had more people applying to our programs. Our co-working space is full, and there has been this really incredible energy built off of people seeing other role models in the city really take on issues and succeed. So I went full-time with a nonprofit about 5 years ago in 2011, and we launched our first accelerator for social entrepreneurs in 2011. We opened this facility, our 10,000 square foot, two-story facility for about 80 companies in 2013. And in 2015, we celebrated 100 ventures that we have accelerated since we launched. So just here are some fun photos of how we got here. So we're also to mention, we're located in the Broadmoor neighborhood, which is in the very middle, the bowl, you can say, of New Orleans. So this specific building got between 8 to 10 feet of water during the storm. So this is what it used to be, Rim City World, and we converted this building into our working space. We had a graffiti art exhibition inside before we opened, and then here is our co-working space on the inside. This is a photo from when we just opened, and we host a lot of events. So we had Startup Weekend here one time, and so our large co-working space in the middle is very flexible. We use it on a 9 to 5 for office space basically, and then after that, after hours, we host many events. So to tell you a little bit more about who we are and what we do, we are a social innovation incubator. So what this means is we launch and grow companies that are tackling environmental or social issues. We specifically have focused in on 4 verticals, and they are, as Jesse had mentioned, water, food, health, and education. And because we don't believe that one entrepreneur or one company can solve a big social or environmental issue on their own, our big vision is to build a critical mass of entrepreneurs tackling the same problem from different angles and different perspectives. So I'll just give you one quick example. In our water sector, we have entrepreneurs who have invented more efficient ways to plant cypress trees to prevent coastal erosion, a way to do wetland mitigation in coastal areas, bringing additional government and private money to restore wetlands, living shorelines, so oyster reef barriers on the coast, floating islands. So these are all innovations to tackle coastal erosion and restoration. And we believe that if we have 5, 10, 100, 1,000 of the best entrepreneurs with solutions to our water issues, we can be a big part of the solution and move the needle on a very, very big problem. So a little bit about our impact. So since 2011, we've incubated over 100 companies. 85% of those companies are still in existence. They have collectively generated over $62 million in revenue and financing since they've been with us, and over 250 jobs. And not all, but many of our companies started off as just an idea. And we've received national attention and our entrepreneurs have as well. So we've been featured in Wired Magazine, the New York Times, LA Times, Entrepreneur Magazine, and Fast Company. And then a little bit about the diversity of our entrepreneurs. So of the ventures that have participated in our impact accelerators, 66% were women, 38% were led by minorities, and then 77% were either led by minorities or women. So this is, I think, different from many of the incubators and accelerators across the country because we have, I think, probably a more diverse participant pool. And part of this is because I think a lot of people are very, very, at least in New Orleans, they're very, very motivated by solving these big challenges. So this is how we do our work. We follow a 5-step process of sector analysis, pipeline building, acceleration, access to capital, and then our collaboration and shared physical space. So what we mean by sector analysis, we do research and advocacy within each of our 4 sectors. And this is unusual as well for an incubator because most don't provide policy support. But for several of our companies, we've learned over the years that there are barriers that if a policy change were to happen, that it could really make it a lot easier for a lot of entrepreneurs in that sector. So that has become an area of focus for us. The second thing we do is we build pipeline, and we convene people in this sector. So the reason pipeline building is so important is because a lot of a lot of residents have ideas, and they're very much at the very early and idea stage. And so we want to make sure we can start working with people when they are at that stage to get them primed and ready for our accelerator programs. We also do a lot of convenings in the sector with government leaders. So in water, we work with our Sewage and Water Board, with our local parish leaders, because it's really, really important that the entrepreneurs have access to these government leaders, especially when it comes to contracting and finding new customers and clients. So I'll talk more later about the venture acceleration and support, but this is the core of our programming. So we run a startup accelerator, and actually 4 startup accelerators in each of our 4 sectors, and a growth accelerator in the spring. And then the 4th piece is access to capital. So we're currently working on this, where we're going to be developing our own social venture loan fund so that we can invest in our alumni and our companies directly. We also provide pre-committed equity investment as part of our growth accelerator. And then the 5, the collaboration in shared physical space. So this is really providing a platform for the ecosystem for entrepreneurship in New Orleans. And a lot of that happens in our 10,000 square foot facility. Okay, so some of our key programs. So related to the pipeline building and convening, we run a series called PitchNOLA. And PitchNOLA is really to get ideas at the very, very earliest stages. And it's a very fun pitch competition where we typically have 10 finalists who pitch in front of an audience of over 200 people. We have judges that are American Idol style and are celebrities or leaders in the community who come and judge. And then the audience, there are cash prizes that are given, and then the audience also come and vote and decide who they want, who they believe are the best companies, and then those companies get money as well. One fun competition we do, so these are the PitchNOLA series happen in each of our 4 sectors of water, food, education, and health. And one fun competition that we did in food was in partnership with the New Orleans Redevelopment Authority. So I'll just get past these real quick and show you this slide. So we partnered with a city government agency, the agency that owned most of the vacant and properties in New Orleans. And it was thousands and thousands of properties, and they were trying to figure out ways to put these properties back to good use. Well, we knew entrepreneurs and residents who had many ideas for these properties, but had a hard time getting through to the government because it's a somewhat bureaucratic process around gaining access to land. So we were able to put together this partnership with NORA, the Redevelopment Authority, where they put up 50 properties. This one in 2014 was 15. The other one was for 50 properties that they put on the line. All across the city. And we put an all call to the city and said, if you have a great idea, you will win some money. You can win some money for your idea, and you win the land directly from NORA. So it was land and money. And so we did this competition, and lots of great ideas were proposed, and people started, and I'll go through some of the examples of what people came up with and what is still in existence today from that competition. Okay, so going back a few slides. So that's the PitchNOLA series. And then in our Impact Accelerator, this is our core programming. And the Startup Accelerator is, we have about 7 to 10 companies per sector that go through this 3-month program. And it's very intensive with mentorship, accountants, graphic designers, all kinds of technical assistance experts. The companies work out of our space for free while they're in the program, and we provide a lot of increased visibility. And the purpose of the Startup Accelerator is to build proof of concept, so to launch a pilot, or to get your first paying customers. The Growth Accelerator is the second phase. And so some of the startups are able to graduate into our Growth Accelerator. And this is for companies that have shown some initial traction and are about to scale up. It's, again, a 3-month program, and it comes with pre-committed equity investment. And then we are now at about 100 alumni, and so we're also able to provide a level of support to alumni and network them with other entrepreneurs in their sector. The Social Venture Loan Fund, we hope to that we can launch that in the next 2 or 3 months, and this will be primarily debt to the companies that we know and companies that are in our 4 sectors of interest. Okay, so people are often interested in our funding model. So we are a nonprofit, but we also have a for-profit subsidiary. So I'll talk through the nonprofit piece first. All of our programming is run through the nonprofit 501c3, and we are primarily funded by government grants, national foundations, and local foundations. So some examples include the Small Business Administration, the Economic Development Administration, the W.K. Kellogg Foundation, the Case Foundation, Capital One Bank, and then a lot of local family foundations. Our earned revenue component is our facility. So we also run a facility. Our co-working space is an LLC, for-profit, and it's a joint venture between Propeller, the nonprofit, and our developer, Green Coast Enterprises. So we generate about $250,000 plus in revenue per year through doing the co-working and office space. And this is, for us, really great because we are able to lower the cost, our operational costs for many of our events and our programming. So to give you a sense of the work that we actually do with the companies, I'm going to go through our 4 sectors to give you a sense. So in food, we're primarily focused on the local food economy and food access for underserved neighborhoods. And so one of our big projects, one of our companies that we launched a few years ago is called the Healthy School Food Collaborative. So these are the kids eating the food. So it was a combination of several policy issues that we had to move with the USDA and the Louisiana Department of Education and the Recovery School District to allow schools, individual charter schools, to put out bids or put out RFPs for healthy school food instead of being on the school district's collective contract. And so we broke up a big contract that was, typically $10, $20 million into individual contracts, one by one, and then found an umbrella entity that could handle the paperwork for this. And so last year, this initiative had reached over 40% of all New Orleans public school children, with over $10 million in reimbursements through the National School Program managed every year. And when I talk about healthy food, we're, in this program, it's everything prepared from scratch, a fresh fruit and vegetables daily, no hormones in the milk or the meat, all muscle meat, no high fructose corn syrup. And so there are a lot of these standards that we put in here that we were able to hold the school vendors accountable to. And then because we controlled and influenced this contract directly, we were also able to put in a 5% local procurement initiative in here, which opened up the door for our other entrepreneurs that we've worked with to start serving food to schools. And so so this was kind of an anchor initiative, and so we had many alumni that have been a part of it, from the Dryads Market, the old, which used to be called Jack and Jake's, which did the local distribution and aggregation for our city, to the Cookbook Project that does nutrition education. This initiative also is one of we partner with a third-party evaluation company, and is one of the largest plate waste evaluations in the country right now. Another example is the Capstone Project. So David Young, who's standing here with his beehives, was one of the winners of the PitchNOLA competition I had spoken about earlier. So he won one of the lots during the competition, and he went from 1 lot to 26 lots in the lower 9th ward, and he has developed he sells local honey, and then also has orchards and gardens, and he's able to give away food to the community through sales of his honey. So he's, in 2015, Capstone shared 2,550 pounds of food with residents of the lower 9th, and has also started the retail operation of its honey business. Okay, and this is a photo of another one of our ventures, the Veggie Co-op, which is a collective of farmers in New Orleans East, all Vietnamese, who lost a lot of their livelihoods and income after the BP oil spill. So they were fishermen and shrimpers who then turned to farming to make ends meet. And so this collective sells food to many of the restaurants in New Orleans. Okay, and this is an example of our water management work. So in New Orleans, well, in Louisiana rather, billions of dollars in damage from subsidence. So green infrastructure is a big, big piece of the work that we do with the companies, and coastal restoration as well. So some of the statistics show that New Orleans itself will be underwater in 50 years if we do nothing. So both of these issues are very big for us right now. And so this one, this is Green Man Dan, this photo. And Green Man Dan is a for-profit underground rainwater containment system. And so he captures water when it floods, when it rains really hard. And when he was going through our Accelerator programs, he was able to secure new contracts through introductions and networking that he made through the program with different government agencies, and received several contracts and really shifted his business from pure landscaping to one that was working on stormwater management. This is Nicole Wagasak from Martin Ecosystems. So Nicole, she's the one that does the floating islands. And so she has a few projects that she's done in the Gulf Coast Intracoastal Waterway in Arose. The EcoShield product is, she has a few more contracts that are that she's going after right now, and just secured another a big project in Brazil. So part of our strategy in water, because there is $50 billion that is about to be spent and has started being spent in this area, we really want to make sure we build a sustainable local water cluster. So part of that is making sure that the companies that are getting incubated here in our state, that they can also start exporting the technologies that they develop. Okay, this one is Magnolia Land Partners. And Mark Bernstein works on wetland mitigation. He has secured contracts for over 1,300 acres of land. And maybe I'll go through these education and health quickly. So Royal Castle Child Care Development is one of our companies that they run a child care center. In educational equity, the three areas we focus in on are early child care, K-12, and opportunity youth, which is 16 to 24 kids, about 16 to 24 that are out of school and out of work. Libby is with Whetstone Education. They are an education tech company, and they just secured a contract to do their professional development teacher observation data system for all of the DC public schools. Operation Spark, they are a code school, and they have wonderful results where 100% of their graduates in their first boot camp that they launched were able to get jobs in the tech sector at jobs of $45,000 to $65,000 annually. So healthcare, we work with direct services, and this is Henry. They work in health and tech, and they streamline patient data, patient engagement and recruitment for clinical trials. And they have just secured a $1.5 million equity investment in our in the last 3 months. This is Robin Griffin. She works in Social Security benefits, and she's been able to get over $1 million in benefits for children. So maybe to wrap it up, so some of the challenges that we are facing right now and what we're working towards, access to capital is a big one. So we hope to launch our fund soon, but it is a barrier for us right now for the entrepreneurs. We're also putting more of a focus on our verticals in our kind of the food, water, education, and health. And we're really moving towards more of a collective collaboration and systems level change to really build those supply chains and collaboration between the entrepreneurs in the program. And I can speak more about lessons learned at the end of the during the Q&A session. This is our contact information. So thank you.
Thank you so much, Andrea. Perfect. Yeah, we'll have a Q&A, so we already have some questions that have come in. So we'll move on to Napoleon, and then we'll move to Q&A. So Napoleon, it's all yours.
Great. So I know that I'm the only thing standing between folks getting to ask Andrea a bunch of questions, which I want to do as well, so I'm not going to take too much time. My name, again, is Napoleon Wallace. I'm with Self-Help. on the executive staff over at Self-Help, and our primary work is as a community development financial institution. So, some folks say that we're a lender of last resort. Some folks say that we are the kind of community development finance backbone of a lot of communities across the country. And that isn't just us, that's also the network of community development financial institutions that we're a part of. So today I'm going to talk a little bit about some of the work that we do, some of the work that kind of we've done historically, and then specifically some of the work that we do around small business and entrepreneurship. So just to get started on the right foot, so that everybody kind of knows what they're walking into, Self-Help in a lot of ways, and this would be described by our CEO and a lot of our executive staff, we're a social justice organization. So the item that you're looking at, the chart you're looking at right here is the gap between the family gap, the racial wealth gap between black and white and black and brown. And for the time that we've been around since 1980, this has been one of our primary missions to try to overcome this gap and bring a bit more equity to the financial markets. The way that we think about this is through our mission, which is to create and protect ownership and economic opportunity for all. Again, you kind of know what you're walking into when you start to talk to Self-Help. Now, the thing that might be a little different about us is that unlike other kind of social justice organizations, many that folks know about in their own communities, we are also a regulated financial institution. So we bind two nonprofits, the Center for Community Self-Help, which is a kind of organizing and development organization, as well as the Center for Responsible Lending, which is our policy arm that fights against predatory lending. We bind those with three financial institutions that span North Carolina, Illinois, California, and Florida most recently. We have those institutions are two credit unions as well as a loan fund. The credit unions are what you think about in a traditional credit union, a traditional financial institution. We provide full services to all of our members throughout all of the geographies that we serve. And then we have a loan fund that allows us to take riskier bets that other financial institutions are able to take. So, one way of thinking about this is, in Durham, North Carolina, we did a project that was a $40 million large loan project to redevelop an old mill in downtown Durham that was a bit of a blight on downtown. And that project was something that couldn't have been undertaken really by any other lender in the area. And that proved that the developer went to go find financing, and we were the only developer that was, or we were the only financier that was able to step in. This doesn't just show up in our large loan products. This also shows up in small loan products, which we'll talk about a little bit later. So the tools in the Self-Help Toolbox, we have a lot, but there are three that I think come up a lot when folks talk about us or when we're entering a new community. We have a history of doing a lot of affordable home loans, and folks might ask, well, what does that have to do with small business lending? From our perspective, and the research would say that the majority of first-time or for financing for a small business comes from the equity in someone's home. And so, we started this in 1980, where our original sort of mission or original work was to go out and make loans to worker-owned cooperatives. And then we found that we needed to find some way to kind of support the equity in the homes of each of the members of the worker-owned cooperative in order to make that loan to the larger group. And so we've kind of extended this, and now, a big chunk of our work is affordable home loans. It also has a whole lot to do with kind of, advancing the wealth gap issue. Another item that folks know us for is quality education, or access to quality education, specifically around educational attainment, or specifically around like financing for schools and seats. We've done almost 70,000 or developed almost 70,000 spaces for students in the time that we've been doing this work since about 2000, and that's about $100 million out the door. This also, for don't have to explain it. This also, we feel, has a pretty significant driver, or is a pretty significant driver in terms of creating spaces where entrepreneurship is nourished and developed. And then specifically to kind of like the small business work and our business lending, We've done about 200 million in total loans to businesses as well as facilities loans for businesses, and this includes our small business loan portfolio. Small business loan portfolio isn't that large, obviously isn't at 200 million, but it is a decent chunk of our portfolio. Now, just kind of to take a step back, when folks think about the small business lending market, I always like to put this chart out there just to kind of show where the loans are being made and who's making the loans. And the truth is, the vast majority of small business lending is done by your traditional banks. It isn't necessarily the new kind of local microfinance fund or the local or the new kind of marketplace lender. But in a lot of cases, most of the loans or most of the lending is going to come from your traditional banks. Specifically, smaller banks, small community banks, they happen to have a larger portion of their portfolio reliant on small business lending. And then business credit cards are the largest alternative segment. They outpace merchant lenders, credit unions, and even some of the SBA guaranteed work. Now, the reason that market sort of analysis is important is because the thing that you didn't see there is this gap that exists for small business borrowers. So, if you're a traditional Main Street small business borrower that has a high credit score and a whole lot of collateral, you aren't really going to have a problem finding credit to finance your business. For us, though, in the communities that we serve, we don't normally get that type of borrower, or when we do, we believe that it's a better fit for them to go elsewhere for financial services or for a loan, so that we can make sure to dedicate our capital to the folks that need it most. Our target market, again, the group that didn't show up on that chart, are going to be lower net worth borrowers, businesses with insufficient collateral, small startups or expanding businesses where there isn't a track record, and then borrowers with prior credit issues, with blemish credit, and then smaller loan sizes. For most financial institutions, your traditional banks, the ones that were showing up on the prior chart, on the previous chart, each of these areas is a reason to deny someone. There was a study done in 2013. I won't go through each of the items, but you can tell how, if you're someone that walks in with a slightly blemished credit score, possibly weaker collateral, especially after the crisis where, maybe you had home equity and then the home equity was wiped away, or you have a history of sort of like, poor financials, not in terms of actually performance, but in terms of reporting. All of those things can contribute to you not being able to get a loan. And we don't feel like that's fair, just because we believe that, a lot of credit score and blemishes on credit have to do more with the person's wealth, likely inherited wealth or otherwise. It has more to do with that than it has to do with the person's character. And we feel like this targets specifically African American communities, communities of color, and women. So, like in places where there's an interesting sort of analysis that kind of demonstrates exactly why, 25 or why the average woman or minority borrower has 25% of a Main Street borrower's sort of like business credit. And, one, they're less likely to walk in to pursue a loan. Two, they're less likely to receive an approval. And three, they receive a much smaller portion of an amount once they are approved for a loan. And so from our perspective, this is something that we try to combat with our loan products. We specifically go into markets where other folks either haven't gone or they've gone, but, just based on, kind of the level of credit risk they're willing to take on, they can't lend. And so when I say credit risk, this comes down to the expense of a product. So one way to think about credit risk for folks on the phone that are not bankers is just in the rate that you would be willing to pay, or the rate that somebody's going to charge. For the big chunk of the market, so that large portion that we were talking about that occupies the vast majority of the market in terms of total loans out the door, those loans are primarily going to be 5% and under, maybe a little less than 5% and under for small business borrowers. And so what that means is that, there's really a cap or ceiling on the level of risk that somebody's willing to take on as a small business lender. And so if you're somebody, if you say it's 5%, and these are obviously round numbers, if you say it's 5% credit risk that if someone's willing to take on. That basically means that only 1 out of 20 people could default and that make, that loan still be a profitable loan. So if someone is a 6% credit risk or maybe even a 7% credit risk, there really isn't a great space for them to go. And what we find is the gap that, a lot of CDFIs like self-help are trying to fill is that space between kind of 5% and when the person can't get the loan at 5%, they immediately have to pay 20% because there's not a whole lot of folks filling that gap. That's the space that we look to fill. Again, borrowers that are slightly credit blemished, borrowers that are maybe don't have the operating history that a traditional bank would expect, borrowers that don't have collateral or at least not as much collateral, and we try to fill that market with products that can responsibly serve them without overpricing, without giving them an overpriced loan. And so just one small item to think about or kind of like to be more tangible and specific. So self-help has in doing this analysis and seeing kind of our space in the market, one of the things that we realize is that, community finance lenders are in a lot of ways, the lender of last resort before someone gets to a very high interest rate loan. And so we want to be able to give a loan to someone, again, that's responsible, but also, to someone that really needs the credit. Maybe they're credit blemish and they can't get it somewhere else. The recent product that we've come up with has been a $25,000 loan product that is an unsecured, no collateral loan up to $25,000 that we feel like really does serve kind of like the portion of the market that we're trying to target. So again, the credit blemished or the micro borrower, the micro business just looking for a loan. And it serves that market well in two ways. One, because our pricing is going to be improved beyond what a borrower would be able to get if they went to a credit card or if they went to a merchant cash advance or any of the other options available in the market. And two, there is a certain level of technical assistance that we provide that we like to provide along with the loan. So not necessarily after a loan is given, but what we found is in developing someone to be prepared for a loan, we give a tremendous amount of technical assistance and support to help that business along the way so that if they get the loan with us, they can be successful, as well as they'd be able to possibly get a loan elsewhere afterwards, after paying back our loan. So that's just kind of a quick summary of self-help, and here's my contact information. Again, I think we're obviously rushing to get to Andrea's portion and hear a little bit more about Propeller and ask questions. So I'll hand it back over.
Thanks, Napoleon. Fascinating stuff. Great. Well, we have a bunch of questions. First, a couple questions for you, Napoleon, since it's so fresh in our minds. Anansa has two questions. Interesting. She's working in Nigeria among the internally displaced people affected by Boko Haram insurgency. And access to energy for cooking and lighting is a major challenge. She's wondering, first, for Andrea, can the Propeller model be adapted to empower the community she's working with? Maybe, Napoleon, that's a question for you as well. So, Andrea, you want to start with that?
Sure. So I think it can be, and I think it probably. So when people ask us this question of like, can we start this in our own community? We've just experienced a disaster or something has been, or just chronic stress in our communities. And I think the first thing that we did that we found to be effective was to just do a pitch event and to see what ideas currently exist, because I'm sure that many people have many ideas about how things can be made better, and this is an outlet, and having it be a public event where a lot of people attend helps to create, I think, a sense of hope that there are people with solutions and people there are people who have the wherewithal to do something about the problems that they see. So we found initially in starting out the pitch events to be a very good way just to see what's bubbling up and what are people wanting to do.
Great. And Napoleon, I'm sure you have some thoughts. Ananta also is wondering how do they secure unsecured loans? Maybe you have some insight into how do you create a banking system when there isn't one that exists. Any thoughts about that?
Yeah, absolutely. I mean, so, just to be, fully transparent, not that, it's not visible in the slide deck, but, self-help was started in 1980, but microfinance has been going on for a really long time. And so I think that, a lot of the lessons that we've learned as an institution have come from other countries and other places where there has been displacement or crisis or stress, and folks have had to find alternative forms of sort of, securing a loan or providing banking services, since the kind of traditional infrastructure for banking services has been decimated. One of the things that we feel like we're advancing here, and that likely already exists in a lot of other communities, especially in the developing countries, is the relational banking. So like folks understand kind of what relationship banking is at a traditional financial institution, Bank of America, Wells Fargo, any other big banks. It basically means like there's someone that you talk to on a regular basis. They know your business and they understand a lot about your business, and that allows them to say yes to you a little bit quicker. What we've seen is that kind of like for us, it isn't going to be the speed of saying yes to someone, but instead it's going to be the ability that we are able to say yes to someone because we understand their community a little bit more. And so, like deposit circles that currently exist, in a lot of cases, those are lending pools. And I think that, like if you wanted to, I'd say it might be, I'm not sure how big of an interest folks have in, trying to develop an entire banking system, but definitely sort of like starting a local small banking system with a small group that can, kind of like provide basic funding to individual small businesses. I think that that's something that currently exists in developing countries and probably exists in the community that the person was asking the question from.
Yeah, great. That also gets back to a couple of questions we've gotten from Mai Moore and Laurel Yancey, asking Andrea how you guys got your funding, and specifically how you got your original funding with Capital One, various foundations. Maybe you could just get into that a little bit.
Yeah, sure. So initial funding. So it was hard as a startup doing this work, and we're basically an intermediary, and not many people really understood what we did. So it was really hard in the beginning. But we were fortunate that we got our initial seed funding from HUD. HUD has a program, a CDBG program, and we qualified for the small business technical assistance programs that they were funding at the time. And the person running the program had seen our work and had seen the traction, and so she helped us with that. In terms of Capital One and other banks, so we're also funded by a local bank, Iberia Bank, and JPMorgan Chase. So the banks have they have to give out money, and it's through I think it's called CSR. Actually, there's a regulation around it. I forget exactly what it's called. Napoleon may probably know, but they have to give away some money, and if you qualify, whether it's working with low to moderate income communities and business owners, they have a few certain categories that you could qualify for. And so if you're working with businesses doing technical assistance, and many of them are low to moderate income businesses and individuals, then there is a high likelihood you could qualify for the bank funding. Napoleon, do you know the name of that? It's not CSR. It's something. What is it?
It's the Community Reinvestment Act, CRA.
CRA. That's what it was. Yeah.
Great. And so, Andrea, did you use that initial funding to finance the staff to do sector analysis and pipeline building? And where did the continued funding for that come from? Was it the co-work space revenue?
So it's a combination of things now. So initially it was to provide, the funding was to provide technical assistance to companies directly. So that paid for the consultants and the mentors and the coaches that we used. For the specific sector work, we have found that most foundations invest in a sector, and there are not that many that invest in entrepreneurship or social entrepreneurship generally. So within food, we know that there are 3 national foundations or local foundations that really care about food. So those are the people that fund us. In water, there are, again, 3 foundations that fund us only for water, same thing in education, same thing for health. So we have found that to be more effective is to go after the sector funding rather than a broader entrepreneurship funder.
Great, that makes sense. So you set up the nonprofit so you could have the foundation grants come in to fund the research, and then the for-profit is for the investment into a startup.
So actually the investment into the startup is through another entity. And because we don't, like Napoleon, we don't have the many years of track record lending to companies, we partnered with another foundation locally, also one of our tenants. They're called the Foundation for Louisiana, and they provide program-related investments. They have a track record, so we're developing a sub-fund of their loan pool. But we will make the decisions around lending, but it will be using their track record so that we can raise money for the fund. The revenue generated from our building goes, some of it goes, a little bit of it goes towards our programming, but primarily that writes down the cost of our operations.
Great, makes sense. And are all the ventures that you guys fund for profit, or are some nonprofit?
So it's about a 60-40 split. In the last growth accelerator, it was a little bit different, but it's usually about 60% for profit, 40% nonprofit. But most of the nonprofits have an earned revenue model.
Great, thank you. And there's some questions about getting PDFs of Napoleon's presentation, and we will be posting that on our event page later today or tomorrow. And Napoleon, there's some questions about, do you guys work out, you mentioned you work outside of North Carolina, in Illinois, California, and can you just speak to the expansive geographic and kind of how you guys are expanding and where you are?
Yeah, so our primary method for expansion has been through merger. So in California, it was very strategic that, we went out and raised funds, kind of seed deposits for our credit, our seed net worth for our credit union just after the crisis, because we knew that there were a lot of communities in California that would be adversely affected by the crisis. And that meant that a lot of credit unions that were supporting those communities were at risk for a risk of failure. And our thought was that, continuing service really was part of our core mission in those communities, like ensuring that they have continued service for responsible financial services. So, our primary tool has been through merger, definitely in California and in Chicago. In North Carolina, we've had a decent amount of organic growth. We've also grown through merger, but we've really kind of gone deep into our communities. And one of the things that we've been looking at is that, a lot of the credit unions that have come in through merger have been traditional sort of consumer credit unions. And one of the things that we believe is that there's a rich opportunity for small business lending within these same markets or memberships. And so one of the ways that we've been growing organically has not been necessarily geographically, but how do we provide additional services to members that otherwise just had kind of basic checking, savings, car, signature, mortgage loans, now with products like small business loans or kind of redevelopment loans, so that they can help build their own communities and build businesses in their own communities.
Great. And so, for instance, we're based in the Bay Area. Do you guys have small businesses who are taking out loans here in Northern California? Is it all online? Do you have a actual brick and mortar anywhere in California, or are you just expanding virtually?
Yeah, so we are in California. We're in Northern California, right around the Bay. Self-Help Federal Credit Union or Community Trust. That's the name of the credit union there, and we have branches across the Bay Area. And then we also have branches extending south to outside of LA and on the edge of San Diego. So we do have brick and mortar in those communities, and a lot of our kind of traditional sort of business lending is housed out of Durham, just because that's where a lot of our commercial team sits. But the services do extend through our traditional credit unions. So if someone were to walk into one of our branches, and there's a map that's available on our main site, so you could see kind of all the branches. But if someone were to walk into one of our main branches, they'd be able to sit down with someone and kind of like do an intake process for a commercial loan there. And then if someone is wanted to do an application online, they could do the same.
Interesting. Great. And this is the question for you as well, Napoleon, from Betsy Morris. What do you think about housing cooperatives as a form of asset building? How does self-help work with housing co-ops or other shared ownership housing communities like co-housing or land trusts? Is that something you guys get into?
So we have in the past in pockets, and I think that, is something that we, to start, I think housing cooperatives are a tremendous opportunity for wealth building. They kind of check all the boxes in terms of, an asset that's going to increase in wealth, kind of reducing risk to the individual homeowner, as well as, or as far as kind of like market risk, as well as providing kind of a affordable entry point for someone into a home who otherwise might not be able to have access. And so I think that housing cooperatives are a really great structure. One of the things that, and this isn't necessarily through self-help, but there are a few CDFIs within industry that have really started looking at how you make loans to housing cooperatives, just because it is kind of like an odd sort of mechanism to do a mortgage loan. But the idea being that, like if you can find a way to make a loan to a housing cooperative, you're not just affecting one community or one individual, but you're affecting kind of a pool of borrowers that are now going to have access to, affordable home ownership, as well as a wealth building opportunity, as well as kind of like a responsible financial services where you're not competing. So I think that that's I really like sort of housing cooperatives. The lending hasn't really caught up with the demand yet, but it's definitely something that we're looking at, and I know there are a lot of other CDFIs that are looking at it as well.
Yeah, I was just about to ask you, are there any first movers who are lending to support housing cooperatives out there, maybe really small? Or
yeah, I want to say a couple of names, but I think I might get someone in trouble. So I will put those maybe in my notes, if that's okay.
Yeah.
I'll get permission to call someone out first.
Research. Yeah, we'll do some research first. Great. Andrea, this is a question for you. I'm not sure if you've heard of Artscape in Canada. It focuses on creative placemaking to lead community entrepreneurship with bringing together developers, community, and programming. Is that how you would define Propeller's work? And is that happening? I don't know if you're familiar with that program, but do you feel like that is what's going on in New Orleans right now? Or
I think there's definitely a lot of it. So Propeller doesn't focus as much around the art piece of things, and we're not art and the arts is not one of our verticals, but there are several organizations that do arts, that have arts and entrepreneurship and creative placemaking as part of their mission. I think one or two organizations have an Art Place grant, so I think that might be part of the same program. But there are, New Orleans is a very creative place, and there are, many people who are, working on social justice issues through art and have developed really cool facilities around that. So while we don't specifically do it, there are many others who do in the city.
Great. And there's a question regarding, and you got into this a little, Andrew, but maybe you can expand funding. This is questions about combining farming and housing and community, but a lot of your projects are agriculture and food systems based. Can you expand on a couple of those examples and just talk a little bit about a little bit more about that, because you were in a rush, so I think there's some interest in that part of your presentation.
So the question is around the intersection of farming and housing?
Yeah, maybe the food systems and community development building. Yeah.
I see. Okay. So all right. So I can the food systems piece. The housing, we don't actually do housing. There one or two, but maybe a little bit tangentially. It's not one of our sectors. But in terms of food systems, the way we think about it is we believe that in order to make change, that the system really has to work together. So it's everything from the anchor institutions, who are the big purchasers, like the hospitals, the universities, the schools. They're the big buyers, to the producers and everyone in between. So there's need for the distributors and the aggregators and the people who are actually producing the food. And so we work across the system, and maybe I'll give you some examples of how it kind of works together. So on the producer side, we have the Veggie Co-op and a few other urban ag companies, some of which do aquaponics. And so they well, obviously, they produce the food. And then in terms of distribution and aggregation, we used to work with a company called Jack and Jake's that was doing the local distribution and aggregation. We helped them set up their first distribution center and their kind of the trucks to get to deliver the food. And then we also work with help to incubate another incubator, food incubator, called it's through another nonprofit called the New Orleans Food and Farm Network, Edible Enterprises. And so that facility has industrial grade kitchen equipment, bottlers, label makers, and so food entrepreneurs can go and start their food businesses through that facility. So we help to incubate them as well. And then we have the kind of on the purchasing side, we think is really important because if there's not demand from the market, it's hard to make this stuff go. And so local procurement is a big push that we have made around food. So I mentioned in the in the K-12 in the K-12 public school system, we were able to put in the 5% local procurement, and food vendors, have to turn in quarterly reports. We are also pushing for universities and hospitals to put in very, very clear local procurement guidelines. And when we first developed these guidelines, it was in collaboration with the food service vendors, because we wanted to make sure that we were doing something that was reasonable, because in Louisiana, we don't grow every crop competitively, but we are very competitive during the season for sweet potatoes, citrus, and strawberries and rice. And so we want to make sure that those and dairy. And so we want to make sure that those products can get into the schools.
Great. Thanks for that. A little bit more about the food systems you guys are working on. Napoleon, last word. Where is self-help headed over the next 5 years, and do you see this space growing, filling this gap, or do you see is it shrinking, and what challenges are still exist for what you guys are doing?
So I think that I think self-help is going to get really, really big. You can start there. I'm joking. I think that we self-help has been kind of like on a steady climb, and my thought is that we're probably going to the trajectory for the organization as a whole is probably going to stay in the same kind of general direction. I do think that small business lending is going to possibly be a larger portion of what we do with and I think that probably for the entire CDFI industry, just because historically a tremendous amount of money and investment has gone into home ownership, and that has produced some really kind of positive results. And kind of like we were saying early on, the focus on home ownership in a lot of ways has been to develop assets so that you can start to find other ways to develop assets even more, so you can have more scalable assets. And so small business has proven to be a true sort of mechanism for wealth building, especially in low, moderate income communities, as well as low wealth communities. And I just see that being a really significant part of what how the CDFI industry looks to kind of bridge that wealth gap. And especially since, small businesses create so many of the jobs, I see city makers and, economic developers and, governing bodies really relying on entrepreneurship more in the future as a tool for economic development and advancement than they have in the past.
Fantastic. Last word, Andrea. You have 30 seconds.
Just that I think there's a lot of opportunity in social innovation, and that if anybody is interested in starting this in their city, or if they just want to learn more, would be happy to talk.
Great. Thank you so much, you two. This is really insightful, really helpful for all of our attendees. And we will be posting both Andrea and Napoleon slides on our event webpage at cityminded.org. And we will have to wrap up with that. I want to just thank everybody for attending today. We will be, when you close your browser, a short survey will pop up. So we really appreciate your feedback. Hope to see you at next month's webinar on our blog, and of course at our annual summit, Meeting the Minds 2016 in October in the San Francisco Bay Area. All that information is available at cityminded.org. And again, Andrea and Napoleon, thank you so much for your time today, and we'll see you soon. Thanks, everybody.